Okay, welcome guys. Welcome back to another weekly webinar. Thank you so much to the legends that were being extremely patient with me while I quickly make some minor tweaks in reference to the analysis, simply for the fact that TradingView decided to delete everything that I did last night. So quickly just made some fine tuning, like this trend should be fixed right here. And so this week, guys, I'm excited to be going into what's been going on within structure, what we can expect, as well as what had happened last week. So there was a video, guys, that I was thinking of making in reference to a separate YouTube video about, when starting the quarter off negatively, in a poor performance that you didn't expect, how can you turn it around quickly and make quick adjustments so that you don't go down into a very deep emotional roller coaster and potentially hurt yourself for the remaining quarters. And so instead, someone part of the webinar had asked if I could review that and go over what had happened last week and why, even though the setups that were called on the webinar all went through, the signals that I sent last week didn't go through. And so we can do that through here, guys. I'm excited to get into that. And so we'll go right into that topic. And so starting off, and then from there, we will get into the weekly market outlook. And I think you guys will be excited about this beginning topic. And so what had happened, guys? Last week, we had signaled two trades. We had signaled Euro US dollar buy as well as GBP USD sell. And unfortunately, both had gotten stopped out, as well as the prior week before that, we had signaled, and this is discussing about the start of quarter three. We had sent USD CAD as well as US dollar Japanese yen. Now, if you look at the accuracy rate within the last four trades, they are not quite good. And so I started scratching my head and started figuring, okay, so USD CAD went through. And the interesting thing is that even though, I'm 1 for 4 on the quarter right now, I'm still up in pips. And that's the beautiful thing about being a swing trader. But a very important concept, guys, that we have to go over. And telling you guys, how I, as a full-time trader, make adjustments when the quarter doesn't go as planned. And I think this will provide a lot of transparency to you guys, to anybody that's interested in becoming a full-time trader. And like I said, how you turn it around quickly. And so what had happened? Like I said, trades didn't go through. So I started scratching my head and thinking, well, what is going on? Is it something within my approach? Is it something that I need to keep in, is it something that I need to change, or what is really going on? So then I go back and I check all the prior signals before the start of Q3, and I'm noticing that, I'm still nailing between, the 80 and 90% accuracy rate. And then, I go through and I remember that, every single week since the start of the year, you haven't missed a setup. You've called every single setup, right? And so if that's the case, then what is going on? Why am I starting off the quarter really poorly? And so what I started to do was I really started to go into each aspect about how I approach the markets, from a top-down analysis perspective all the way down into what was coming out that day from a data and an environment perspective. And then I started to assess, okay, well, how did you take the trade? Well, the trades were warranted, technically correct. But from a, fundamental perspective, in an environment perspective, it wasn't okay to pull the trigger. And we're going to be going over that. And so, instead of me, after starting the quarter off poorly, questioning my approach, starting to, become fearful, starting to doubt how I trade, all I simply did was start to shift my focus into a different, element of my approach in trading. And I'm going to, make sure that is a main point that I am, highlighting what I need to do. And I'm going to give you this example and then go over the reasons why those trades didn't go through. So, for example, I'm going to give you guys this bodybuilding metaphor. When, let's take a bodybuilder, for example. They're working out, right? And after a couple months, they're going in the gym and I mean, they go to the mirror and they look at themselves and they're like, wow, everything's looking good. Chest is looking good. Shoulders are looking good. Arms are looking good. I mean, everything's looking good except maybe my arms aren't as proportionate to everything else. So what does the bodybuilder decide to do? Instead of taking the intensity out of their training, they simply, he or she might add an extra day of arms into their routine to build some mass so that they could have a proportionate, body. And so instead of taking the intensity out of their training, they're simply shifting their attention to a certain element within their training so that, they can grow in that area. And so if I train, and then, after a couple months later, they go back, they look in the mirror and they're like, wow, everything's looking good now. So I'm going to take that extra day of arms out and just go back into, my, normal training routine with the same intensity. And so what I do is take that exact metaphor and translate it into my trading. So for example, we're going to go over the 3 trades now, and then I'm going to use that metaphor and show you guys how I'm going to just shift my attention to that certain element within my approach to trading. So after USD CAD pushed through for over 100 pips, which was great to start the quarter, we had signaled US dollar Japanese yen. Now, if you guys are not part of my training course, a lot of my students, look, and shout out to all my students, you guys called me out on my analysis, right? You guys said, why are you signaling what you're doing? You're going against your own principles. And I want to talk about a concept real quick, guys, with you. I strive to be the man that I am right now speaking to you. I strive to be the subconscious man that is on the webinar. Why? Because regardless if Albert can call the setups on here, consistently, in the moment, it's completely different. And I think everyone can agree on that. You start to maybe think a little bit more and start to factor in a bit more in reference to, what could potentially happen. Now, that is why in the end of the day, it might sound odd or funny that I strive to be someone that I am, but within, the environments, let's say. And so going into it, back to the first example of US dollar Japanese yen, my training course, my students that are part of the training course know, from the day one principle, when 2 channels intersect at the same point, what do we simply wait for? We simply wait for a daily close in either direction. Apologies, guys. My computer once again just crashed. I'm just going to take my laptop here and finish the webinar on this. I'm really, really sorry, guys. This is becoming now a hassle. And so I just realized I don't know what is going on with that. So just give me 20 seconds, guys, and then I'm going to go back into that. That is no fun. So going back into UJ and what I was saying before, apologies once again, guys, about the sudden shutdown. So going back into it, students of the full volume training course know that when 2 channels intersect at the same point, we simply wait for a daily candle close in either direction. And so you look at where structure was within here, and we can see that structure, short term was ascending, and we can see that through here. But at the same time, we look at structure in its entirety, and we can see that we did have some, bearish momentum. And so where I signaled the initial play was within, the crossroads of both trends. And so I simply went against my day one rules, which was we are simply waiting for structure to prove to us which way it's going to move, whether it's going to break out to the upside and, pull back and then continue up, or we're going to see a break below the ascending trend, some type of pullback, and then we could expect some push to the downside. So that is a day one principle that I went against. And so right off the bat, I identified, why structure didn't push in our favor. I simply went against, my day one principles. Now, regardless if technically speaking, the trade was golden, from a structure perspective on a longer time frame, we were not good to pull the trigger. So that's the first reason on why, the US dollar Japanese yen trade didn't go through. Now, taking it to last week and what had happened last week, first trade that we had signaled was euro to US dollar. And on top of that, taking a look at it from a smaller time frame perspective, we did know that Draghi was coming out, at that current time. And so what I tried to do was use experience, which is something that should not go over your day one principles, and try to, potentially get a quicker term trade, which wasn't viable. And so let's go into what had happened in reference to the trade that I had took. So to go over the second rule on what I went against with, my students understanding that, our day one principles are our foundation. First was US dollar Japanese yen, which we did state, when 2 channels intersect at the same point, we need to wait for a daily close in either direction. Now, the second rule that my students know is that when high volatile data comes out, what we simply need to wait for is a daily close once that data comes out, simply for the fact that we want the market to digest the data and we want a more calm environment that we can go and approach structure. And so with that, when Draghi spoke, what did I see? Pulling it to the 1 hour time frame here, guys, just to show you guys why this trade didn't go through and why, regardless of what technically structure is telling you, if you don't follow certain principles that are put in place to reduce the risk associated to you, you simply deserve to lose. And look, I'm not complaining in the end of the day when it comes to, me, pulling the trigger incorrectly, because you know what? I completely understand what I did incorrectly. And I deserve to lose every single penny because I went against my day one principles. And so notice this, the trade that I had taken in signals was, we did break out with Draghi's, a speech coming out. What I had initially had as well was I did have these fib retracement extensions, right? And so you can see here that we did break the last lower high, creating a short-term higher high, as well as we did in fact retest and close above, potentially telling us that, this was all treated as relief. We are moving in an ascending movement from the daily perspective. We could potentially expect a rally back to the upside. But you guys would be like, well, Albert, how could you say that you were correct on the webinar last week, but you signaled it incorrectly? Well, let's go over this. If I direct your attention real quick, legends, to Instagram, let's go over the criteria that I said, not to Instagram, apologies, let's go to YouTube. Let's go over the criteria that I said that's going to warrant this EU buy, okay? And I want to show you guys that I got the first part correct, right? But I didn't necessarily, and this is a perfect example of planning the trade and trading the plan, okay? And so if we take a look at last week's webinar, we can see here that when I was calling EU, what was I stating needs to happen for the buy? And you guys should all be able to see this, but I'll just make it bigger for you guys. So what did I say needs to happen here on the webinar first? Initially, I said we were going to get the sell. So I didn't listen to my initial plan, what was going to happen. We didn't get, I didn't take the initial sell. But if I was going to take the buy, what did I say needs to happen to take the buy? First and foremost, what did I need? I needed a break of the descending trend line to tell us that, all of this was treated as liquidation or a state of relief for further continuation back to the tops. But I missed a very critical point. When I was running the webinar last week, what did I state needed to happen? We needed some type of liquidation or small pullback to warrant further continuation to the upside. Why was I stating that? Generally speaking, after you see a shift within momentum from, warranting continuation of the current daily momentum or whatever structure you're in, a short-term pullback or a state of liquidation, a short-term state of liquidation will tell you that those are simply, market makers grabbing liquidity for a further push to the upside. Now, unfortunately, I didn't listen to what I had said here because you guys can see that we did break out. But one thing I didn't do was wait for that short-term pullback. And then from there, once this broke out, rally it back to the tops. And at the same time, regardless if technically it looked good, A, I didn't listen to my plan, and B, let's go back to day one principles. When high volatile news comes out, what do we simply wait for? A daily candle close so the markets can digest that current data and allow us to have a clear direction whether the data impacted the current state of structure or simply stayed the same, warranting a non-event movement. And so once again, a perfect example of, even though technically speaking, it was good to pull the trigger, from an environmental standpoint, it wasn't because I didn't wait for the daily candle close when the data was emitted. Perfectly fine. I'm learning from what I'm doing wrong. And then from there, I'll show you guys exactly how I'm going to shift my attention and my focus. So that's EU. Then finally, GBP USD. Tried redeeming myself. Now the trade did end up pushing through in the way that we had anticipated. Unfortunately, though, it had got stopped out. Let's review what had happened. Market momentum here is descending, but at the same time, we did have this short-term ascending trend, which we did warrant as a state of liquidation or relief at the current time. Now, if we do look at a closer area around the 132.20, we can see that structure did in fact break the lows. But more importantly, we did retest and close below, confirming to us that we should continued to push to the downside. Now, once again, like I said, the trade did push through, but there's something very important that your boy Albert here missed. What did I state needed to happen on the webinar 1 and 2? What did I do that I didn't listen to from a day one principle perspective? Let's go over what I stated on the webinar needed to happen for pound dollar. So if we look real quick, USDJPY, here should be pound dollar, there we go. And so take a look at what I had stated. We're either gonna break out of the tops, go, and then rally. Or notice, what did I state here, guys? Structure needs to break the lows, then make a state of liquidation or relief, and then from there we could expect further continuation to the downside. Once again, after that impulse, once we receive that state of liquidation or profit taking, it tells us that the market does just simply liquidity grabs, and we're going to see further continuation. What didn't I wait for? A, I took the trade, from a confirmation standpoint, but I didn't wait for my pullback, my state of liquidation. Why? If you guys watched my previous YouTube video, this only has one movement, high and a low. We still need a lower high and a lower low to warrant a trend continuation. Now, I did take into consideration that when we did break these lows, that I was factoring in that, we are continuing, but it was too short term. I did take it on the 1. Secondly, day one principle. Students of the full volume training course know when high volatile news is going to be coming out. Price will typically consolidate 12 to 24 hours leading into the pending data simply for the fact that the bigger players are not in the game. They're waiting for that data to come out before they're going to lay any type of positions on the line. And so if that's the case, what had happened? Well, look, we had consolidation, and then from there we got stopped out literally by like 10, 15 pips, and then structure pushed down to the downside. Now you guys would be like, well, why'd you get stopped out? Well, once again, I didn't put my stop above the previous lower high plus 15 to 30 pips. Now, a lot of students of mine, they took this correctly. Shout out to all of you guys. You guys put your stop above the lower high plus 15 to 30 pips. Shout out to you guys. Unfortunately, I put my stop exactly where the structural retest occurred, and then we saw a push straight down to where we expected it to go. So, now guys, just reviewing those examples with you and going over what had happened within the last 3 trades that had went south for me. I'm simply showing you guys from a transparency standpoint what I'll do to shift my focus and shift my attention. Let's take a look real quick. So what did we realize from the first example on on US dollar Japanese yen? 1, we didn't wait for a breakout. There was 2 channels that intersected at the same point, and we simply need to wait for a daily break in one direction or the other. Let price prove to us which way it's going to move so that we can have a clear direction on where the continuation of that initial push is going to go. Secondly, euro to US dollar. Yes, technically speaking, that was a golden trade. But what didn't I wait for? High volatile news. Draghi just spoke 6 hours ago. Now, I tried using experience and saying, well, even though Draghi spoke, it looks like momentum is in our favor. That's a pretty strong 4-hour candle close. We did, in fact, receive confirmation on the 1 hour, but we didn't wait for the daily candle close. We didn't allow the markets to digest the data quick enough. And so if that's the case, then therefore, hi, Mom, we deserve to lose. If structure does in fact start to become very volatile because of the data, that is our fault. So secondly, we didn't wait for the daily candle close. No daily candle close. And then last but not least, legends, GBP US dollar. Technically, once again, the trade was golden. But what had happened? Well, A, didn't listen to a day one principle. When there's high volatile news coming out, 12 to 24 hours, price will typically tend to consolidate leading into the data. No big players are in the game. Now, we did factor that in. I did announce that there was high volatile data coming out, which that could potentially come about. But the biggest issue of all was that I didn't put my stop above the previous lower high plus 15 to 30 pips to give it breathing room. So there were 2 issues in that point. Day one principles, and the stop loss was incorrect, right? The stop loss was where the structural retest had occurred. And then from there, we saw continuation. So once again, I deserve to lose. So all in all, what is this telling me? And how am I going to use that bodybuilder metaphor to fix the remainder of the quarter? Well, I'm not going to change my intensity. I'm not going to question my approach. All I'm going to simply do is shift my attention back to my day one principles. I'm still going to look at the market exactly at how it is in its entirety. But at the same point, I'm going to keep in mind that every time I'm looking for a trade, Legends, those three things, and more importantly, my day one foundation principles will be at the top of my list to check off before I pull the trigger. And so if that's the case, guys, I'm just going to make sure that comes about for the next coming weeks. And so if you guys do see that is disconnecting, I got the bigger computer back on so I can bang out the analysis in a better way. And so with that, Legends, I want to provide some transparency in reference to, why things didn't go in the way that I had anticipated to in the beginning of the quarter. And you know what? It's not a problem at all for two reasons. One, if you guys know how I construct my risk, I start with a set lot at the beginning of the year. The set lot usually equates to about 1% to 3% of my total capital. Now with this, I understand that myself, Albert, will be at my absolute freshest or my absolute sharpest in the beginning of the year. Why? I haven't traded much in December and really not much in November. More importantly, I take about 3-4 weeks off before the start of what I call the new trading year. I am so fresh. I have not looked at a chart. And so reason why I keep the same lot size for the entire year is that if I'm going to be really fresh for about 2 quarters and a half, if I start burning out by, let's say, quarter 3 or quarter 4, which typically my quarter 4 is my time to shine. Quarter 3 is usually just slow because of the summer. But that's okay because my risk is so diluted after, 8-9 months that the initial 1 to 3% that I was risking is so mitigated now that it doesn't even matter if I take a couple of faulty trades. Now, at the same time, it's not to say that I should just let up my intensity, but all I'm just trying to show you guys is that this is how I personally go about, fixing, what I need to fix in reference to my analysis so that I don't go down this dark, spiral type of emotional roller coaster, and start questioning everything that I'm doing. In the end of the day, take it from me. As a full-time trader, no strategy is 100%. All we care about is beating the market. At least that's all I care about. And so, for me, I look at it as I've been living on this approach for close to 5 years now. If I take a couple of hits, it is what it is. I'm going to figure out what I did wrong and just simply shift my attention in my approach to that area for a given set of time. And then from there, look at everything in a nice harmonized approach once again. And so with that, Legends, I hope that provided some transparency in reference to why the trades didn't go through. All were technically good trades. And yes, I did call exactly how, they should be playing out on the webinar. But like I said, I strive to be that subconscious man on the webinar. Like I said, there's a main difference between, thinking freely and having attachment in towards what you do. And so with that, it was simply a learning week. The markets have not been the best either way. We have been seeing a lot of, fake outs, a lot of false movements. And so excited to be getting into today's webinar. I hope you guys enjoyed that topic, that little piece. And so I'm just going to switch to my other computer again. If it does crash, I do have my laptop here. And so we will make sure that we get through this webinar. So I'm just going to jump. I'm going to stop sharing this screen here and give permission to the other computer, Legends. And then from there, we will get started. So what is my name on the other one? Albert. Okay. Oh, I'm still annotating. There we go. Cool. 2 seconds, guys. Where's the other Albert? There it is. Okay. Let's do make host. All right. Can you guys still hear me? Yes, no, maybe so. Beautiful. Beautiful. Legends, let's get into it today. I'm excited. I'm receiving Trump level hate. What do you mean I'm receiving Trump level hate? I'm messing with you. But in the end of the day, I'm not here to, start any drama, any wars. I'm just here to help you guys out and really try to provide as much transparency as I can and insight on what a full-time trader does with his or her time. For this case, it's his. And so regardless, guys, excited to get into everything today. And so if you guys are new to the webinar, welcome to my weekly webinars. What I do here, guys, is I break down the $6 index pairs that you can see from the watch list, as well as I do give outlooks on the next 24 to 72 hours in where we could expect structure to be moving. And so one thing I do want to take into consideration is that I'm not going to focus so much on the monthly and weekly timeframes for a lot of the pairs, simply for the fact that we are range bound in itself. And so rather, I'm going to be focusing more on a shorter perspective and looking at really in detail what could potentially happen with the current data that is coming out. Please keep in mind, guys, that we do have a lot of pending data for a lot of the pairs coming out for the remaining of the week. Like I was saying, for my signals and setups, guys and girls, it was that, most likely I will not be taking any trades or signaling anything until Wednesday night, most likely Thursday morning London time for me, simply for the fact that we learned our lesson last week. We're not going to be taking trades regardless if they look technically sound to take, only because we don't want to incur the choppiness when it does come to trading. And so with that, excited to get in today's webinar, guys. Not much movements within most pairs, rather typically the same. We're going to be starting with the dollar index to start off. Like I said, not going to put too much tension or focus into the monthly and weekly timeframes because we're not really making any significant movements. Rather, the crypto market is. Whoever's invested, shout out to you if you're receiving a payout on that. And so, like I said, guys, if you guys are new, welcome. I'm going to be banging down these $6 index pairs, as well as we do Q&As at the end. And so if you do have a question, just save it for the end and I will get to it. Whether you want me to break down a chart or whatever you need, I will get to it. And so with that, guys, I hope you enjoy and let's get right into it. And so looking at what's been going on, guys, for the last couple of weeks, nothing really significantly, especially in the dollar index. Now, one thing to factor in is this was a key area that we have been talking about for quite some time. A lot of rejection here. We can see that there was a lot of bullish pending orders sitting here. Basic support, right, turning into resistance now, or bearish pending orders, whatever you want to call it in the end of the day. And so I'm just showing you guys where market makers and as well as a lot of algos will be placing orders. We are not in a definite buy market as of right now, as this is all treated as a state of liquidation or relief after that initial impulse was made. And so the only way that we're going to see a definite, continuation of this bullish momentum is if we start to crack above the monthly resistance sitting at 94.15, short-term pullback, and then from there we could expect a rally at least to here, if not to the tops. The reason why I'm saying here is this is where the initial bearish momentum did start, my friends, and so to invalidate that, we're going to have to break back above, but if we don't, this could just turn into a structural retest for potential continuation back down to the lows, but it's too tough to tell as of right now. Not enough significant movement within the pairs. So just looking at dollar index, not putting any serious analysis into it because I care more about the majors. And so looking at dollar from a weekly time frame, once again, nothing significant. This is a basic candlestick pattern that we teach in the courses. This is the impulse. This is all deceleration or exhaustion at a key level. On top of that, legends, this is a reversal pattern and not a continuation pattern. And so one thing to factor in is that this reversal pattern can start to turn into a continuation pattern if we hold where that initial bull run happened, or even if we pull back all the way down to the 90.26, that can still be treated as relief for potential continuation back to the upside. The only way we can invalidate this initial bullish momentum is if we start to break below it, and more importantly, break back below these lows to definitely warrant lower lows. But as of right now, too tough to say. We can say, though, that there is a potential inverted head and shoulders pattern to come about, and then from there, that 94.15 would be your neckline. And so, like I said, this could create a higher low on the trend, short-term liquidation for potential rally back to the upside, but too tough to tell from the weekly and monthly time frame. On the daily, we're getting more of a picture of what could potentially go about. I mean, like I said before, this is not a trending movement right now. If you guys know how a trend forms in 4 movements, not 2. Let me give you a quick example. If we start with an impulse, that's only 2 movements, as you have a low and you have a high. For a trend to actually be considered a trend, what do you need? Well, you do need a higher low, and then you do need a higher high. 4 movements. Now watch this. When we do form the higher low, that actually does create your liquidation, your profit taking, as well as legends of the full volume trading course know that becomes your structural retest. We all know what that means. And so looking at, dollar as of right now, let's look at it. That's our low, right? And we're just going to say that this has just been a straight impulse. Now, you guys would be like, well, Albert, isn't that subjective? Because we do have an impulse, a pullback, impulse, pullback, impulse, pullback. Yes. Good. Yeah, that's fine. But if we look at it from a longer time frame perspective, we are simply just impulsing, right? Because you do have a low and you do have a high. Some would say this is a higher low, fair enough. But unless we break these highs, we are going to expect some type of pullback just because of the way the formation is coming about. And so looking at it from a daily time frame perspective, key levels we want to take a look at. 95 and above. If you do break that we would expect further continuation to the upside if we do start to receive some type of pullback and then from there start to break out. This would be a nice, clean, free-flowing trade if we do crack out of the highs. But like I said, that is very unlikely to happen because of this impulse and the way the nature of this structure formed. More importantly, we are range bound between the 94.15s and the 95 handle. So if we do create short-term lower lows, you could expect a drop down to the 93.50 to the 93 handle. Once again, we can see a short-term head and shoulders pattern occurring, with this being the left, that being the head. If this broke down, pulled back, creating relief, that would be your right shoulder, and then you could expect a rally down to the neckline around 92, 92.50, and then potentially if we break lower, back down to that 90.26 handle that we were talking about in the longer time frames. Please factor in, once again, this would be treated as relief for a state of liquidation for potential continuation back to the upside, unless we did in fact break back below, where the initial ascending momentum started by breaking this initial resistance. So, and then followed by a continuation pattern below the weekly support for further continuation down. Now, looking at dollar, I don't think it's really necessary to look at it from a 4-hour time frame perspective, only because we really just want to see from a bigger term perspective. We know we are range bound. There's no point of looking at it from a shorter perspective. It's either we need to see something like this, right, or we need to see a short-term play like this and then another short-term play down there, as we could start to pull off, or we could expect one more rally and just keep pushing like that. And so ideally, that's how we're expecting dollar. There's simply no other way it's going to come about. It's either going to create short-term lower lows or create higher highs. Then once that happens, legends, then we can now have a clear direction on, okay, which way are we moving? Which way are we going about? But until dollar breaks out, I don't care who you are. You should not be looking to trade mainly dollar pairs. And someone would be like, well, dollar doesn't drive the currencies, Albert. It's like, well, you got to look at what's correlated to what, and more importantly, how does everything move in its entirety, okay? And so unless something fundamental comes out that causes other base currencies to move, just know you're going to be range bound. Pulling it to EU as of right now. What could go about? So let's take a look once again. Monthly is not really that significant, just like dollar. We are simply just holding that base. I mean, are we going to say that this is in fact, a structural retest after we broke out? Some would say that was structural. This is all relief. Some would say it's too tough to say as of right now, because we could either pull back, create, that right shoulder of this head and shoulders pattern. This would all be treated as relief for potential continuation down if this is being the neckline. That's one example. And also this would create a structural retest of that initial low we broke. Yeah, that's a possible solution. Now, is that going to happen? Tough to say. Some people are like, yeah, we're going. I don't know where you're getting that, that idea as well. But as of right now, bears are still in charge. That's a given. We can see that this was the initial drop. This is definitely a state of liquidation within a range. Now, like I said before, we can see a potential head and shoulders pattern coming about, which, regardless if we break out of the range, this is still treated as short term, as this would still be a state of liquidation. You have to factor in, legends, where this initial bearish momentum started, which was breaking the lows of 121.40, around there. That's where it started. The only way you can state that, you know what, we're in a bullish ride is if we actually crack above not only where the bearish momentum broke, but creating higher highs as well. That's the only way you can come to me and say, yeah, we're in a bull run. But until then, all buys are treated as short-term, moderate to higher risk. Not saying you can't take them, just know you're going to look for 50 to 100 pip pop, and that's it. Because you have two key stopping points, right? You could have this one first being right here, where the left shoulder initially formed, creating that right shoulder, then start dropping to the lows. That's a possibility. Or we're going to pull back. If you don't know what a structural retest is, it's just simply another type of retest telling us that structure potentially is confirmed being broken or not. And so looking at it from there could create a lower high as well in the trend and drop. Like I said, unless we receive this impulse, all buys are warranted as short term. Now, looking at it from a daily perspective, even on the weekly, we're range bound. Nothing's going on right now. It's not really important to say, where is price going to move in the next 24 to 72 hours, but have a really good understanding of, well, where's price going to move for the coming weeks? That's what we need to understand. Because the moment we can understand that, we're going to have a much clear perspective on which way we need to go about this entire structure. And so looking at it from a daily perspective, what do we see? Well, in the past here, legends, we did see a lot of pending orders, which makes sense why we're going to receive pending orders. If you guys are not aware, the art of technical analysis does state that we are using past to predict future. Harvey asked, is that an inverse head and shoulders? So just speaking to this example, I don't know which one you were talking about, but if you're talking about dollar index, it is an inverse head and shoulders. And so looking at it, understandable why we're receiving false breaks. False breaks in the past makes sense why we receive false breaks in the future. Now, on top of that, some would ask, well, Albert, why are we range bound? What is going on here? And so the reason why we are range bound, legends, is because after this initial impulse was made, this did all warrant that liquidation or a state of profit taking. Every impulse does come with some type of liquidation. It has to. Why does it have to, legends? Well, think about yourselves for a second, real quick. If you make some money, you're going to close, which means you're going to liquidate. You're one of those people within this range. Fair enough? And so looking at EU, how can we go about it? Well, we have to factor in that, yes, we are in a liquidated movement. But within the liquidated movement, we can see this initial impulse made. This can be treated as relief. If we do break out, we could expect a short-term rally back to the tops of the range. More importantly, sitting at weekly resistance, this is warranted as short-term. The big buy is a break above the weekly range, short-term continuation pattern, and then from there we could expect a rally. Apologies, that's a poor illustration, but I hope you guys get the point. Now, the sell has a lot more downside than the upside, and so if we do get a break, a short-term pullback below the monthly support telling us that this is an invalid break, then we could expect a rally back down to the ranges. Just like the buy here, the longer-term sell would be below weekly support, continuation pattern below weekly support, and then we could expect a drop. You have to invalidate key levels. Okay, so looking at it from a 4-hour perspective and looking at where we could expect structure to move in the next 24 to 72 hours, let's take a look. We can see here that we do, in fact, have this descending trend line. We can see we are in some type of liquidation or state of relief after this initial impulse was made. And so what is going to happen? Well, there's two scenarios in my opinion. Let's take this range that we are sitting here with a lot of pending orders, as well as let's take a look at where these false breaks were occurring from. So now that we've identified those two key areas, it should be very simple on which way structure should move. What we are going to look for is a break not only above the descending trend line, but the previous false breaks that started this entire bearish momentum. Then from there, we're going to expect a short-term continuation pattern, and then you could expect a rally first back to the tops, and then from there to the weekly resistance. Now check this out, legends. If it doesn't form a continuation pattern and continues to impulse, that might not be the trade for you. As in, if it continues to keep going after that push, that might not be the trade for you, because you guys don't typically want to enter on a impulsive movement. You always are going to expect that liquidation, that relief, and things of that nature. So you always know that your trade's duration is warranted as short term. Now, at the same time, let's say that example does not come to fruition. How can we look for the sell? Well, what do we see here real quick, legends? False break, false break. So if that's the case, I need to break below. I got to invalidate these pending orders. Then I got to see some type of pullback, liquidation, state of relief below the daily support. Now, if it does pull back even harder into the daily support, it doesn't mean that you're not going to expect continuation down. As long as you're sitting below the monthly, you're good to go. At some point, you're going to expect a drop, whether it's back above the daily support or below the daily support, but that would be your trade. Now, taking a look at it from a 4 hour, no, that was 4 hour perspective. I'm spacing out there real quick. And so failure to do either, guys, would just warrant range within where you currently are sitting within. That's not something that you're really interested. You want to invalidate these false breaks as well as you want to invalidate these false breaks. So it's pretty critical right now where you're at. Nothing should really be interesting from a bullish or bearish perspective on EU. And so let's take a look at USD CAD. It's finally slowing down, right, after we made that huge weekly break. Let's take this off real quick so we can just take a look at what is going on within structure from the longer time frames. This is definitely a structure that we should be going over simply for the fact that we did in fact break out of, a almost 3-year descending trend line. And so looking at it though, a lot of people are saying, well, Albert, we're due for a buy now. Remember, a trend is not a straight line shot, legends, but a dictation of highs and lows. If that's the case, let's take a look. This is the high, that's the low. This is the lower high, same low. This was the last lower high, so what did we do? We created short-term higher highs. Short-term, because where's the key area to break? That 136 handle. We break this. Yeah, this is all done. This was the impulse. This was all treated as relief, and then we are going. But as of right now, let's look at it from a different perspective. And this is what's crazy about visual legends. If you guys don't have, structure painted to a picture in how it's supposed to go, you could be very confused down the line. If you take a look, we do have the initial impulse that was made, followed by a long state of liquidation or relief, followed by another impulse, followed by a long state of liquidation or relief. Now, check this out. We're going to look at something on the daily time frame, but if I would be a betting man, which that's what I do for a living, I take bets, right? Actually, I'm just a statistical player. But if I was a betting man and I'm looking at the 2 blue circles and the 2 yellow, liquidated movements, I'm still siding with the bears right now. For now. Now, it's not to say that I'm not keeping on high alert that we might expect some bullish momentum. But you best believe, unless we crack the tops on smaller time frames, Albert will not be signaling a buy. Now, the other interesting thing is that if you guys know behavioral analysis on the weekly time frame, we measured it with the students of the full volume training course in the live training a couple weeks ago. Did you know that this movement and this movement is about 100 pips more than the first one down? And secondly, did you know these states of liquidation are exactly the same amount of pips? How interesting is that? But that's not the most interesting point of all on US dollar CAD. And this is something that I'm excited to go into with you guys. Take a look at this. If you see when CAD started its initial drop, where did it pull back to? It pulled back to where its previous bearish momentum begun. How did the bearish momentum begin? By breaking this initial low, dropping, right? Then pulled back, made that state of liquidation or relief, stopped right where it initially started its bearish momentum, and then continued with its impulse. Watch this, legends. And this is the power of behavioral analysis and what it can really do for you. If you take a look at where USD CAD is right now, it is literally at where it started its initial bearish push. You can see here by breaking this low, that is where the bearish momentum begun. You see where we are right now, we are exactly at the same point at where one was. If you look at this, these are exactly the same. Now, like I said, it's not for me to say that, okay, expect a huge sell. That's not what I'm saying. But all I'm telling you guys is that it's interesting to see that if this ends up playing out like that bearish play, that's how automated the game is, okay? And tells you that, at the end of the day, it's all about, a matter of how much money is sitting on which side. That's what it comes down to. But looking at it from a daily perspective, what is going on? Well, let's take a look here. Like I said, we can see this initial drop here, which, like I said, I am treating all of this as a state of liquidation or relief, in which we do have a deeper impulse inside of it. Now, looking within the deeper impulse, what had happened last week, we can see that we had an initial push to the upside. This was treated as relief for a state of liquidation, but when we broke out, we didn't break the last lower high, warranting a failed shift within momentum. Right? A trend is not a straight line chart, but a dictation of highs and lows. Have to break the last lower high to create a short-term higher high and start potentially expecting rallies back to the upside. That's just a given. If we don't do that, of course, the bears are still going to take power. Key levels are very important. I hope you guys didn't get caught in that. And so, looking at USD CAD, I should have this daily resistance here. Apologies, legend. Oh, no, I have this one. No. That broke. That's valid as well, but then where am I getting this from? That broke. This is not a level that we need to have. So looking at it from the 4-hour time frame perspective, where is USD CAD going to go for the next 24 to 72 hours? Like I said, you're still keeping in mind that the entirety of the momentum is still ascending. And so if that's the case, then therefore, you still are buying. But just speaking from that, really bearish perspective and speaking from a longer time frame, just keep in mind that if that huge bearish push happens, don't be surprised why. If it does, I was here to say that's going to happen first, but if it doesn't, don't call me out on it. But no, like I said, I'm keeping in mind that we could still break to the upside, but not until we break the 136. Once we break the 136, then yeah, you could expect longs to the upside. But until then, Albert's still very skeptical. But not to say that we can't expect one more buy up to here. I'm going to go over that right now. So, entirety momentum is ascending, but look more in detail. We do have an initial push to the downside. That's a terrible arrow, Albert. Stop being so sloppy. Okay, here we go. That's our impulse to the downside. What is all this? This is all a liquidated movement. Now, within the liquidated movement, we did have a short-term impulse. All of this was treated as profit-taking or a state of relief. Now, check this out. We did, in fact, break out, but we did not break the last lower high of this bearish push. So, what do we need to see to happen? Well, that was very simple and clear on what we identified, and let's just add this range of consolidation here for you legends, and let's see what could potentially go about, and let's make it a bit thicker. Very simplistic now, legends. We're going to break out, retest, could expect a short-term buy to the upside. Why? How did this bearish momentum start? Did break this previous support, warranting this becomes newfound resistance, or bullish pending orders, bearish pending orders, could expect some rejections or wicks. At the same time, students of the full volume training course know that this would be warranted as a structural retest, and we could expect some drops straight back down. Now, how do we invalidate this initial bearish play? Well, once we get to this region, could expect another push back to the upside. Now, I wouldn't necessarily be so fond of this because of what's going on in here. My cleanest play is breaking above the previous weekly resistance, followed by a short-term continuation pattern, and then you could expect a rally back to the monthly. That would be something that I'd be more interested in taking. Only because I'm not interested in dealing and fighting with market makers and the algorithms and all their pending orders and with the wicks. I want free-flowing trades. And so that would be the run for the buy example. And looking at it from a sell perspective, we are range bound after this initial impulse. So how could you take the sell? Well, first, what do we have to do? We need to wait for this ascending trend line to break. So we are going to wait for a huge impulse below the monthly support. Now, actually, I just thought about it, legends. This would be a longer term play and more lower risk play. So let me give you this play, and then I'm going to give you the more higher risk play that you could run down to. So for the definite sell, you want an impulse below the monthly support followed by a short-term continuation pattern, and then you could expect it to start running to the downside. You want to invalidate this initial bullish trade, right? So you want to break back below how it initially started. Now, like I said, I did think of one short-term sell that you guys can take, but going to be warranted as a moderate to higher risk exposed trade. Please take a look at this previous zone that I'm highlighting here. You can see a lot of pending orders. So what we could expect structure to do is drop below make a short-term continuation pattern, and you could expect to sell within there. Like I said, this is short-term because this whole structure can still be treated as relief after the initial impulse for potential rallies all the way back to the tops. Like I said, the only way you're going to invalidate this initial bullish run is you got to break below the monthly support and where it initially started its bull run, followed by a short-term continuation pattern, and then you could expect a push down to the daily support around the 128.76 handle. Failure to do either, guys, will just warrant consolidation within where we currently are in. Should not be something you legends are interested in. Be careful. CAD news coming out, weekly EA news coming out. CAD's going to be a volatile pair to trade. Should not be something that you're interested in, but does have some good opportunities, is getting ready, but you do want to wait for a break of the highs or lows. US dollar, Japanese yen. A trade that I could have signaled. I'm going to quickly show you guys. We're going to go over the weekly and monthly real quick, but then going to show you guys. Whoever follows the setups and doesn't just wait for me to send the signal, shout out to you guys, because you guys should have made money on this. I called it straight away in the setup, said we should just push straight to the tops, which we did. And so we're going to review that, guys, in a second, but do want to go over what is going on within UJ. Are we descending? Are we ascending? What is going on? Well, let's take a look at a couple of key critical areas here. First and foremost, where that structural retest had occurred, and then that key 100 level that the BOJ is in love with. So we can see now, legends, how critical this region is. Let's take a look at the momentum. We have an initial impulse. Now, the impulse caps off once we break here around the 100 handle. Had a short-term bear market. Then we had a short-term bull market. This could be treated as relief. Now, looking at it from a weekly time frame, because the weekly will give us a better perspective, we can see here, legends, that UJ is entering a very critical region. This should not be something that you want to get involved in. Yes, there is short-term continuation patterns back to the weekly, but once again, this is critical. Cleaner trades are above the 114, 115, back to the 117, 118. Looking at it from a longer time frame perspective, though, I want you guys to keep in mind that initial zone that started this bearish momentum, okay? And so this could continue to push, and then start to drop once again. You have to factor in that all of this is relief after that initial drop, okay? And so it's just a more complex structure because you do have short-term impulses within the entirety of the momentum right now. And so that's why I'm saying be careful, as you are going to start incurring a lot of pending orders with where structure is sitting between. We had a very strong drop at the start of 2018. Shout out to all of you guys who took that signal. That signal ran straight down to the lows. Unfortunately, that was the one signal that I didn't hold for like 300 and something pips. I only got like $1.20 or something, and I was not happy, but all good. The team ate. And so excited to go over what's going on daily right now. We don't need this anymore. I just want to show you guys from an example perspective why the trades last week didn't play out in the way that we had anticipated to. But looking at it from a daily perspective right now, critical area once again, we are seeing a lot of rejections occurring at that 111.87 handle. And more importantly, we do have a lot of critical areas sitting above the 111, to 113.59 area. So it's very dicey, but you could get a rally back to the tops. I wouldn't be surprised if you don't. Now, one thing to factor in, legends, and let me just add this in here just to make it a bit prettier. Oops, what happened? You just went away from me. Okay, there we go. So just to look at it from a longer time frame perspective, upside is good. Downside doesn't seem like we're going to be getting there anytime soon. But looking at it from a 4-hour time frame perspective, why do I got two trends here? I'm not interested in two trends. That works. Cool. Okay. Looking at it from a 4-hour time frame perspective, legends, what can we see? Well, a lot of people are going to be like, Albert, you missed the signal. No, I didn't. I did not miss the signal. I said right here, we're just going to go potentially to push up after the break of the continuation pattern. But we couldn't signal it once again because Powell was testifying. but we were aware that this was going to go. Said it last night, just was not interested. Now, this is a nice trade. Missed it. It is what it is. Right? Now, I'm not hurting about it. I'm not crying about it. It's just it is what it is. So looking at it, why I'm not interested in taking this current buy to the upside. It's not that this is invalid. Let's see from a risk to reward perspective how it would look if this was the last stops. It's not really the best R&R legends, right? And on top of that, this is the initial impulse to the upside. With every impulse does come a state of liquidation or relief. What does it just come back to where it initially broke out from? Create a short-term continuation pattern, then rally up. Now, you would be stuck inside a range, but that is a potential possibility after that initial impulse. Now, let's just take a look, though, legends, at how that impulse started, which it broke. It's a very strong area. But we did break. It's about 112 to about 111. So what needs to happen? If we do start to continue up, we could just expect rallies back up. I wouldn't be surprised. But then we could expect a sharp movements down, or the real play would be a break of the weekly resistance, continuation pattern above, and then running it to the monthly. When approaching key levels like this, legend, you got to be treading. You got to be treading. Very lightly, very carefully, because pending orders with serious money attached to them will take you out in a second. You take a trade and then you go to sleep and this happens and you're like, you're just like, shit. It beat you up. And so looking back at it, if it continues, I'm good on it. I'll take a look for you, legends, real quick on the 1 hour. Like I said, I'm going to do the highlights again. So we're going to go more in depth on these for an entry and exit perspective on the highlights. But yeah, that is why I'm not pulling it. This is a classic reversal pattern after we make a very, very, very strong impulse. Take a look, legends. This is not a trend continuation play. Who cares? Who cares if it breaks out? I'm not interested in that. Not interested. Let's review. All right. So we have this initial impulse to the upside. As you guys know, with my initial example about how a trend comes about, it takes 4 movements, not 2. And if that's the case, this is not trend continuation, that is trend reversal. Now, like I said before, trend reversal can turn to trend continuation. Take a look. This was reversal pattern, turned into continuation, but now, once again, the entirety of it is still reversal. So like I said, if this continues to push, good on it. I will not touch that. It's too impulsive. We need a pullback. If we did that, we could go, but then we would be establishing a range. Now, if let's say we falsely break. The only way I would look for a sell, you do have one short-term sell, which is very short-term. You could take a short-term play like this and run it back down if that ascending broke out. And then from there, you could expect another break at the lows, pull back, drop again. So short-term. To invalidate this initial bullish play, you got to break back below. Short-term continuation, could expect a rally here because this could all be treated as relief for expect rally back to the tops. The only way you would really invalidate this is if you start to break back below, short-term continuation, below the weekly resistance, and then could expect to drop down. Once again, this could all be treated as relief for potential push back up. The only way it would not be treated as relief is if we made a strong enough break back below the monthly support. Not that exaggerated, but back below the monthly support, short-term continuation pattern. And then you could expect rallies back down to the dailies, weeklies, and monthlies. But once again, guys, this is reversal bound. This is not warranting trend continuation. Not interested. Don't want it. Let's take a look at pound. Pound as of right now, legends, nothing really going on. More importantly, structure just simply decelerating or exhausting. I don't really like it. Monthly, just take a look. We are seeing trend continuation of how the entirety of the behavior forms, as we do have an initial drop followed by a long state of liquidation or relief, and then from there another continuation, and we just broke out of that ascending trend. Now, we're not necessarily going to get one of these because this movement, legends, is not as big as something like this. And so I don't expect such a huge drop, but I do expect a drop at least back to the lows. That is something that I am expecting. Don't be surprised why price is pulling off. This is just simply creating a structural retest once it did in fact break the lows. Now, one thing to factor in though, legends, is that On the monthly right now, we can't get enough detail on what price is doing, but on the weekly, we can see here that structure is attempting to continue to push, but you have to keep in mind that we are holding the current base. Now, one thing to factor in is that a trend is not a straight line shot, but a dictation of highs and lows. Even though we broke out of the ascending trend, we only created short-term lower lows once we broke, in fact, this 137, 130, 137.92, 138 handle. Short-term lower lows. Once again, if we do in fact break below, then we could expect a drop down to the next higher low that formed after we broke out of the resistance, definitely forming this ascending trend. This could all be treated as relief, guys, if we start to break out again. The only way that you're truly going to invalidate this initial bullish momentum is you've got to break back below it. Short-term continuation pattern, then you could expect a rally back down to the lows. But too long-term to tell right now, guys. Just giving you guys a more, bigger, longer time frame perspective on which way structure could be moving. Looking at it from the daily time frame perspective, once again, this is not continuation pattern, but this is reversal, just like we saw in UJ, but this is the opposite. After that impulse occurred, we do see a slow, decelerated, and what I like to call reversal channel that formed. How do I know this? A trend needs 4 movements to be called a trend. In this example, with an impulse moving down, this is only 2. We only have a high and a low. What do we still need? Our lower high and then our lower low. That tells us a trend has in fact formed. In this case, when we started, we just had a high and a low, and then we just continued, telling us that this is not a true bearish trend that is forming. And at some point, we are expecting this to pull back and start creating some type of liquidation or relief. Now, like I said, reversal can be turned into a continuation pattern. But the only way that that reversal actually is warranted as a full-blown reversal is if we start cracking above where that initial sell and started, and then from there we could start a whole new trend. But looking at pound right now, too tough to say on which way we're going to move. Like I said, a lot of pairs are range bound. It's not something that you guys should be really interested in trading, at least from the dollar pair perspective. Can see here that this is mainly the range that we are sitting within, and within that, guys, we can see that we do have this initial impulse, which then this whole ascending movement should be treated as relief or a state of liquidation. It's not really a bullish trend. And on top of that, you do want to factor in that the entirety of the bearish momentum is still descending. Now, taking a closer look at this, whether you want to keep this trend line in or not, we can see here that we do have 2 critical areas. We do have this previous, areas where there's a lot of bullish pending orders, which we can see here, or known as just support. Lots of wicks pulling off from this. So if we do in fact see a break below where all those pending orders are sitting, short-term continuation pattern, you could expect a drop down to the lows, meaning that this is your 1, the relief was your 2, and now we are seeing your 3 back to your 1, known as a 1, 2, 3 pattern. The real sell would be below previous lows with a strong enough impulse, followed by a short-term continuation pattern, and then you can just keep holding that down. I don't think that typically happens unless you have some type of fundamental data that is going to cause that to happen. And so looking at it from a bullish perspective, the sells are going to be below this current region. The buys, take a look, a lot of false breaks occurring within here, and we have 2 descending trends, the first one being here and the shorter term impulsive one. Now, if you guys don't want to keep this shorter term impulsive one and you want to make it nice and clean, let's just take a look at what would warrant a buy. Well, we can see short-term buys on the 1-hour time frame potentially, as we can start to see the last lower highs. We can see here that this is the high, that's the low, lower high, lower low. Therefore, this is a critical area for us. At the same time, this is as well. What I'd preferably like to see is this to start to break out after this initial impulse, making a strong push to the upside, short-term pullback, and then you could expect a rally back to the weekly support. Once again, this would all be treated as relief after this initial drop. This would create a structural retest, and then you could expect another drop back to the downside. That is a possibility as well. But like I said, the buys are warranted as very short-term. That's not should be something that you're very interested in, but can be something that will come about. the 4 hour for looking for the longer term duration when it comes to the buy, you really want to see an impulse cracking above the weekly resistance and followed by a continuation pattern above it. And then you could expect potential rallies back to the monthly where this initial bearish momentum started to kick in. Now, looking at it, failure to do either, Legends, will just warrant a range between that 131 handle up until about that 133.14. That's not something that you guys should be interested in. Last two Legends, AUD, USD. Let's take a look. Monthly, nothing's really going on. Like we said, we do have this initial impulse that was made. This is all treated as relief for a state of liquidation as of right now. But looking at it from a more closer perspective, we can see here that we did in fact create short-term lower lows by breaking the last higher low. Now we are at another critical area where we can see there was a lot of pending orders sitting. And so that is why we are starting to see AUD USD start to pull off from the bearish perspective. Looking at it from a weekly perspective, you guys get a clearer approach on where structure is and why it's pulling off in the way that it is. You can see a lot of pending orders sitting here, and so that is why we're expecting prices to start pulling off at least. It's not a clear confirmation that's going to happen, but it's indicating to us that, we could expect some type of bounces. Now, once again, this is all a liquidated movement after that initial drop. So buys are warranted as short-term, moderate to higher risk, sells short-term, long-term, and lower to moderate risk. Now, looking at it from a more shorter term perspective on the daily, we can see here that yes, we are descending, but more importantly, we do have this initial push. Hence, this is all treated as a state of liquidation or relief. But we can see that we do have a short-term impulse here, in which this could also be treated as a state of liquidation or relief. So, pulling it to the 4-hour time frame, Legends, it's really two simple ways that AUD USD is going to come about, and let me put this daily ascending trend here to make it a bit, 4-hour ascending trend to make it a bit clearer. So let's mark real quick. We do have a lot of rejection occurring near that 73.74 handle, as well as we can see that there is a lot of rejection occurring within that 74.20 up until that 74.54. How do we want to take it? Well, once we break back above that 74.20, that would create short-term higher highs. Look for a short-term continuation, and you could expect a rally back 74.54, if not back to the tops. Now, if this does end up coming about, I would expect structure to break out, pull back, and make one more rally back to that daily descending trend line. Now, please keep in mind, Legends, this would all be treated as relief after that initial impulse for potential continuations back to the downside, unless we made a strong enough impulse back to the upside. Now, one thing to factor in is that the really long-term bullish play to the upside is very tough to say when it's going to come about, only because we have been trending so much from a bearish perspective. And so rather, I would just simply say, if you're going to be looking for that longer-term duration from AUD, I would simply wait for that daily descending trend to crack from an impulsive standpoint, continuation on the smaller time frames, and give it a shot. Last but not least, NZD USD on the monthly to start. Nothing really major coming about. We can see the rejections occurring at that 69.50 handle, I believe. That is not what I wanted. I wanted a rectangle, thank you. But at the same time, we do have this initial impulse to the downside. Now, this is all a liquidated movement, okay? We are structurally retesting, liquidity grabs, all that stuff. But we're not indefinitely creating lower lows. So that's why right now you'll see on the smaller time frames, weekly, daily, 4-hour, and so forth, that structure's pulling off. And this is why I have my zones in the way that I do. You can see rejections occurring within all these regions. Makes sense on why structure's pulling off. Doesn't mean that structure's going into a buy market. It just tells us why we're seeing deceleration or exhaustion occur near those key levels. And so looking at it from a daily time frame perspective, we can see that we have this initial drop to the downside, all treated as relief for a state of liquidation. See another drop. Now we are in another similar pattern. Notice the behavior, Legend, behavioral analysis. My friends, don't overcomplicate it. Notice how structure came back, created a structural retest, the previous lows it broke and dropped. Notice how structure is coming back, creating a structural retest, the previous lows it broke and is dropping as of right now. Well, not necessarily dropping as of right now, but is getting close to potentially dropping. So that tells us that all this bullish momentum that we are seeing right now is treated as short-term, moderate to higher risk, simply for the fact that all the bearish momentum is, whoops, that is not a good arrow, is to the downside. Now, do you want to take your attention to this initial bearish momentum? This is all treated as relief for a state of liquidation I want to show you guys where all the pending orders are occurring, which is sitting around that 67.44 handle. So you want to see a break below that, 67.44, invalidating this initial bullish momentum, followed by a short-term continuation pattern. Then you can expect a drop down to the daily support. Or one thing to factor in, legends, is that this environment itself is creating range. And so you can see here that this is ideally what we're holding. You want to see a break above, warranting an invalidation of this initial bearish momentum, short-term continuation pattern. You start to rally that all the way back to the daily resistance. Once again, all short-term, you want to be quite careful until you completely invalidate this. And so you can see here that this would be a very critical area for you. Can see a lot of pending orders there, and so you would just be buying New Zealand into there, as this could still all be treated as relief for potential drops all the way back to the downside, just creating a structural retest. And so, legends, those are the pairs that I want to review in reference to the dollar index setups. I hope you guys enjoyed that, and I hope you guys enjoyed the initial segment about why trades didn't go as planned in the beginning. Perfectly okay. We completely understand why they didn't go through, and so now all we simply do is shift our attention, simply go back to our day one basics, and we make minor tweaks. And so with that, legends, I'm going to be getting into the highlights real quick. Just going to get a sip of water, and then from there I will be doing the questions and answers. All right, legends. So going to explain one last time. If you guys don't know what I'm going to be doing, I'm going to be breaking down these next $6 index pairs one last time for us to give indications on where we could expect price to move within the next 12 to 72 hours. Simply for the fact that we do have a lot of high volatile data coming out. Be careful. Going to be some potential trade opportunities, but at the same time can expect some type of fake outs. Be very, very careful. And so with that, not going to spend too much time at all on the monthly or weekly time frame, simply for the fact that mainly most pairs have not done really much within the coming weeks, just simply ranging between 100 and 200 pips. And so going to focus more on the daily and 4-hour time frames to where we could expect structure to be pushing. And so with that, legends, I hope you enjoyed this, and let's get right into it. So to start off on Euro, just like we've been saying for a couple of weeks, we do see a lot of pending orders sitting between the 115, 116. In addition, we do have a potential head and shoulders formation to come about, with a potential structural retest to come about as well. Let's take a look at the two critical areas that we could expect Euro to US dollar to come to. So if we do in fact break out of this range of consolidation, we could expect a pullback and start rallying back to where that initial left shoulder had formed. Once again, this would all be treated as relief or a state of liquidation for potential continuation back down to the neckline at the 115. Completion of this head and shoulders pattern would be seen by breaking below the neckline, continuation pattern below the weekly support, and start dropping to key levels. Now, like I said before, we could pull back to where that initial bearish momentum had started by breaking this initial low, creating a structural retest, and then from there dropping down once again to the neckline. And same principles apply. If we break the neckline, followed by a short-term continuation pattern, you could expect a rally back to the downside. But you guys are here to see where structure could push to for the next 12 to 72 hours. And so let's take a look on the smaller time frames. Taking a look at the 4-hour on Euro to US dollar, we can see that structure is definitely range bound. And that is due, legends, to the initial bearish push that was made, in the middle of April, finishing off at the end of May. And so within that, we can see that we do have this initial drop and now this daily ascending trend that we are in. One thing to factor in, legends, is that this daily ascending trend is treated as a state of liquidation or relief. But at the same time, I do want to grab your attention, legends, to what is currently happening within structure from a smaller perspective. You can see that we do have this initial push to the upside. This is all treated as potential relief or a state of liquidation. Now, if we do break out of where the initial bearish momentum initially started, followed by a short-term pullback continuation pattern, you could expect rallies back to the tops of the consolidation box. Please keep in mind that the environment is range bound. Therefore, you're only taking your trades to either the tops or the bottoms of the range. Now, the upside is limited compared to the downside, and we do have a key area on where we want to see broken before we can decide to take any sells. And so looking at that key area, we can see here near the 116 handle there were a lot of pending orders. And so what we want to do is invalidate this initial bullish momentum. And the way we do that is by breaking below that ascending trend, and more importantly, how that bullish momentum started, by breaking this resistance, followed by a short-term continuation pattern, or as we like to say, profit taking. And then once we break out, we could expect rallies back down to the bottoms of the range. Once again, legends, the bigger term buys and sells are above the range or below the range. We are not going to try to predict anything else for this week. We're simply just going to trade within the range. That will be your US dollar. Moving it to US dollar CAD, starting it on the daily time frame. Once again, legends, like we were saying on the webinar, we are still bearish on this initial structure, simply for the fact that if we do take a look at how the environment is forming, there's no real significant change with what happened in the first movement and what happened in the second movement. Secondly, the second movement is actually bigger by 100 pips than the first movement. And on top of that, these liquidated movements are exactly the same amount in pips. And if you take a look at how this initial bearish play started, it started by breaking the initial, it started by coming back and retesting where the initial bearish momentum had started. Notice this bearish drop started by breaking these lows. Notice where structure pulled back to. This pulled exactly back to where it broke, creating a structural retest, and then we saw this huge drop. Well, take a look at this, legends. If you see where structure is currently right now, we are pulling back exactly to where this initial bearish run had started, just like we did here. Would not be surprised if we start to drop, making another third leg down. But like I said, it's just a mere indication. It's not really telling us, that we're definitely due for a sell, but it's just something to keep in mind. Like I said, this is treated as a state of liquidation or relief, and within that, we do have more of an impulsive movement. Okay, so a bit more complex. Be quite careful. Pulling it to the 4-hour time frame, and we have a lot of US dollar CAD news coming out. Markets are expected to be choppy, so be careful and wait for confirmation. Looking at what had happened, we made a strong impulse to the upside. From there, we did create a range of consolidation or relief, create a short-term lower lows. We did signal this, and we were able to run it all the way down to the ascending trend, which was a lovely trade for us. We did know that this was treated as relief or a state of liquidation. And so looking at structure as of right now, what is going on? Well, we did in fact break out, creating a short-term impulse, and from there we can see this liquidation or relief occurred. Now, we did just break out once again, but even though we broke out of the descending momentum, structure is not telling us that we're definitely due for continuation yet, until we do in fact break tops of the range, short-term pullback, and then you could expect a rally back to the 132.26, 132.69. Not something that I would be interested in. It's about probably 20-30 pips, and on top of that, this is all treated as relief for potential continuations back down. That's possible, but like I said, to completely invalidate this initial bearish momentum, we need to see a rally back above not only daily but weekly, so you don't incur consolidation, short-term continuation pattern, and then from there expect a rally back to the monthly resistance. Like I said, this is not really your interest, and this is not your interest either. More, you really want to be looking for this if you're looking for that big bullish play. Now, for the sells, what could go about? Well, looking at it, we are ascending on the daily, and so we need to invalidate that first. If we're going to say that we're going to see a continuation of this, and this is all treated as relief for a state of liquidation, we got to break out. And not only out of the daily ascending and the consolidation, but we got to break out of the monthly as well to say that, you know what, this is invalid. This was a false movement. Once we do that, legends, then we're going to expect continuation below the monthly. Why below the monthly? You don't want to incur a false break again. And then you could expect to drop down to the daily and potentially even lower to the weekly. Now, failure to do either will just warrant consolidation within the current range that we are in. That's not something that we are interested in, and so do not trade in the consolidation. You will not win. Wait for structure to simply prove to you which way it's going to move. Looking at US dollar, Japanese yen on the daily time frame, definitely doing some interesting things. We did break out of this descending trend line, potentially hinting to us that all of this was treated as relief after this initial push, and we potentially could start to rally back to the tops. Do I think that's going to happen? Not until we make a clean break above where the initial bearish momentum had started. You can see that this bearish trend started once we broke these lows and falsely broke. And so we can see, though, that looking at it from a shorter term perspective, that yes, in my opinion, this is now telling us that you might definitely be in a bullish run. Now, one thing to factor in is that this was a key critical area. We do start to pull back into that region. Be careful. Now, taking a look at it from a smaller time frame perspective on the 4-hour, just like we showed on, just like we're going to show on pound US dollar, we can see that UJ is in a reversal pattern as well. This is not continuation, but reversal. Just like we went over in the webinar, how many movements does a trend need to form? It needs 4, not 2. Remember, if it makes an impulse, that's only 2. That's just a low and that's a high. You still need that higher low, and then you need that higher high. Higher low becomes your liquidation, your state of relief, your correction for further continuation to the upside, telling you that a trend is definitely in fact forming. If you look at US dollar, Japanese yen, this is just the low. This is just a high. Some would say that this is the higher low, but you have to take into consideration that if we were looking at this from a weekly perspective, this is just an impulse, a low and a high. I don't care what the smaller time frames are showing me. I want to take a look at its, the structure in its entirety and assess, okay, well, is this really a trend continuation play, or is this showing me that we're going to reverse? Now, one thing to factor in, students of the full volume training course know, reversal pattern can turn into continuation pattern. So let's see how that could potentially come about. We did in fact break the high. So like I said before in the webinar, I wouldn't be surprised if we just rally up. If that happens, that's not our interest, because we did do the R&R. Take profit 1, 2, where we would put our stops is not something that we would be interested in. It's not really the best trade scenario. And on top of that, we have data coming out. Secondly, if this does start to falsely break and start to pull off, that is not a sell that you should be interested in. Rather, you should be really looking for a false break and, more importantly, breaking those lows. Pull back, and then you could start to run it down to the weekly support, simply for the fact that this could all be treated as relief for a potential rally back to the tops and potentially even higher to the weekly resistance. Now, if you want to invalidate this initial bullish momentum, we got to break below it, short-term pullback below the weekly, and then you could expect a rally to the ascending trend. Once again, this would be treated as relief for a state of correction for a potential push all the way back to the tops. The only way that you can invalidate this ascending momentum is you've got to break back below the monthly support, stating all of this is invalid, short-term pullback, and then you could expect rallies to the daily support, and that should be daily support as well. Failure to do either legends could just warrant consolidation, but as of right now, I'm expecting a pushback to the upside only because structure is proving to us that we should pull the trigger, but we do have data coming out, not something of our interest. GBP USD legends on the daily to start. We are at a critical area. We can see to the left a lot of pending orders, so it makes sense why pound is in fact pulling off. On top of that, just like I showed you on UJ, GU is in a reversal state as well. That's not trend continuation, but trend reversal. If you look at it from a bearish perspective, an impulse, that's only 2 movements, a high and a low. You still need your lower high and your lower low. That forms your bearish momentum. It creates your liquidation, your relief, your structural retest. However you want to approach it, in the end of the day, you need 4 movements to state that a trend is in fact a trend. And so looking at GBP USD on the weekly time frame, you can't tell me that that has formed actually 4 movements, and even on the monthly, that is just straight impulses. So therefore, this only has 2 movements. We still need a pullback, and then we could expectedly drop 1 more. GU has a very similar structure, just like Euro to US dollar, simply for the fact that we can see that all of this bearish momentum, just like EU, started by breaking the lows. And on top of that, we can see a similar head and shoulders pattern potentially to come about, or a structural retest to come about on this pair. So looking at it, if we break out, just showing you on that example, make a small pullback, we could expect a rally back to where that initial left shoulder had formed, this being the neckline at 131. And so this could potentially pull back to there. This would all be treated as liquidation or relief, and we could expect another drop back down to the neckline. To complete this head and shoulders pattern, we would need to see a break below, followed by short-term continuation, expect a drop down to the monthly quite quickly. This would be a pretty solid head and shoulders pattern if it does complete. Now, if we do continue to make a deeper leg back, it doesn't mean that the head and shoulders pattern is invalid. It could simply just create a structural retest of where that initial bearish momentum had started. Then from there, if this does start to break out, we could expect a rally back to the neckline of pound US dollar, and same principles apply to see that completion of the head and shoulders pattern. Now, looking at it from a smaller time frame perspective, even though we are in a reversal state, you do want to really factor in what is going on within current momentum. We can see that we do have this initial drop in which all of this is treated as relief or a state of liquidation. We do have some two key points that is either going to warrant the buy or is going to warrant the sell. And so looking at it from the buy as of right now, what we need to see is we need to see not only a breakout of the descending trend line, but we need to invalidate how this initial bearish momentum came about. Once we do that and we get above the weekly resistance, we will look for a short-term continuation pattern, and then we could expect a rally to the daily, potentially to the monthly. Once again, still warranted as short-term only because GU's entirety momentum is still bearish. Now, if that doesn't come about, what we are going to expect based on all of this bearish momentum is we're going to expect structure to break these lows, short-term pullback, and then you could expect one more drop down to where that false break initially occurred. The longer-term sell is going to be below the lows, short-term continuation pattern, and then you could expect rallies down to most likely the monthly support sitting at 127,668. Failure to do either, legends may just warrant some serious wicks up and down, left and right, just consolidation, not be something that you guys are interested in. The final two legends, AUD, USD, to get into it on the daily. Critical, but more importantly, we did break out of that weekly ascending trend that we were going over on the webinar. So this was all treated as relief or a state of liquidation after that initial drop that we did see occur at the start of 2014. And so looking at it from a smaller perspective, after this drop, legends, this is not a continuation pattern, but it's really showing a long, reversal. It's a do. But within that, we do see a cyclical behavior. See this impulse, see this short-term state of liquidation, see another impulse, and we are in the same thing. But if you notice, this does rally to the trend as well as this, and this, hint, hint, might pull back to the descending trend line, and then from there start to drop to the lows. Possibility. Only way you can invalidate this bearish momentum, how did it start? Broke those lows? Well, we got to break back above. Short-term continuation above the monthly resistance, start rallying back to the daily, and then you can start trying to trend this back to the upside. Still would be treated as relief for a state of liquidation after that initial impulse for potential rallies back down until you break above these key levels. But looking at it from a 4-hour perspective to where we could move to. Two things that you need to keep in mind. Yes, daily is descending, and we have this initial bearish momentum that was there. This is all treated as liquidation or a state of relief. Within it, legends, this is the impulse. This is your relief. So let's make it just very simple and clear. Where are we going? Okay, we break the lows, pull back. Once that breaks out, free run to the lows. Enjoy. Buy. Break back above, invalidate this initial bearish momentum. Above the weekly, you got a short-term pullback, then run it back to the upside. Short-term again. Longer-term sell, legends, is going to be, there we go. I'm trying to get the eraser. There we go, legends. Okay. Longer-term buy is going to be above the descending trend line on the daily as well as the monthly resistance, followed by a short-term continuation pattern. Run that back up and start trying to trend this to the upside. Those are your possible plays. Failure to do either will just warrant consolidation or range, not something you legends should be interested in. Last but not least, NZD USD to start. I said last but not least. Phenomenal. To finish it off, legends, NZD USD. Take a look at where we are within structure. Lots of pending orders sitting at that 67.44 handle. And so even though there are a lot of buy orders sitting here, do you want to factor in where we are currently within momentum? This is your initial impulse. Check this out. We do have a nice state of liquidation or relief, followed by another drop, and then a nice long state of liquidation or relief. Got a nice behavior forming. So taking a look at it from a 4-hour perspective, there is your impulse, legends. This is your state of relief or liquidation. Now, some would say, well, what about this? What about this? Yeah, fair enough, but come on, let's make it simple, right? So what we're going to do here is one of two things. Either structure is going to prove to us by breaking the lows, short-term continuation, start running that back down. 2, the lows, this being a 1, 2, 3 pattern, falsely break the monthly support. The bigger term sell is below daily support, short-term continuation, not bigger term sell, just short-term sell. Back down to the weekly support. Once again, if you want to get a longer term sell, you got to invalidate this by breaking below. Okay. Now, if that doesn't come about, the other way that we can see the buy is what we need to do is structure needs to break above the daily resistance, invalidating this initial bearish momentum. Then from there, we need to see a short-term continuation pattern, and then from there, we could expect a rally back to the upside. Apologies, guys. There should be a weekly resistance sitting within here. Do you want to see a crack above that, followed by a short-term continuation? You could expect a rally back to the upside, potentially start rallying this all the way back up. Still would be treated as relief or state of liquidation until we do start to break back above here, invalidating that initial bearish play. And so with that, legends, those are the $6 index pairs that I want to go through. I hope you guys enjoyed this. More importantly, I hope you guys enjoyed today's webinar. Hope you guys enjoyed the transparency that I provided and showed you guys clean and sound. Even though if I called all the webinar setups, I'm human in the end of the day. We mess up. It is what it is. Even though that we have a proven winning formula and the strategy works, sometimes when you don't follow the rules, you will get beaten up, you will get bit. It is what it is. No matter how much experience I have, we're human. We're subjected to error. We simply accept that. And all we try to do is make minor tweaks to our approach so that we can constantly improve. Always remember this, legends. Trading is a game of self-improvement. That's all that it is. That's what it is. And so quickly identify the mistakes that you're doing wrong, make a rapid change, and then from there, go on flying once again. So with that, legends, thank you so much for staying tuned to watch me break down these $6 index pair setups. These webinars happen every single Tuesday at 5 p.m. And now I'm going to be getting into the questions and answers. And so with that, thank you, legends, for the ones who stayed. And so now I'll get into the questions and answers. So with that, I'm going to get a quick sip of water, guys, and then I will get into all the questions and answers for you guys. So just give me 2 minutes. All right, guys, let's see what's going on. Let's see these questions. Thank you, Maddie. Appreciate that. All right, let's see what's going on here, legends. If you guys do have a question, you guys want to unmute your mic, by all means, go right ahead and do so when I do call on you. And so I know that Alex and Kunal raised their hands, so I will get to those as well. And so just give me a couple minutes. Going to start from the top in the chat room and then go down. Nassim said, can you post a video about all the rule center trade for the course someday if not it's already done, like a checklist thingy? That's actually really funny, Nassim, because I don't know if he's still here or not. Yeah, he's still here. It's actually funny because I was actually doing that with a student recently, like a couple of hours ago, and I kid you not, we created an entire checklist for him on how he needs to approach the trades. That's a really good idea. Give me 2 seconds. I'm going to create a stickies note of that right now. I have a full list, legends, of everything. Now, what am I doing sticky notes for? I'll create the sticky notes now, and then full checklist on top down. Got you. Yeah, I'll create that. I'll create that this week, Nassim. You got it. That's a really important topic. Yeah, for sure. I'll definitely create the checklist on that. I know that it's a lot to remember, but trust me, take it from me. In the end of the day, anything you do from a 9 to 5 perspective is a lot to remember as well. Your job requires a lot. And so, you don't really think about it. It all comes to second nature, just like this comes second nature to me. When you do thousands of hours of charts, you just remember everything. But there will be weeks like last week where sometimes you go against your own rules because you think your experience is better than what your rules are, which is not the case. Rules are set there for a reason. And so we simply learn, move forward is what it is. To that person drawing that annotation, why are you doing that? No, I'm just messing with you. And so in the sim, I'll definitely update that. No worries at all. Is that a Parvi? I got you. Cool. I'm short term. Please go over how you identify your rejection zones. Yellow rectangle box. It's in DT. Are you in the full volume training course? Because I have a whole video on how you create rejection zones. I don't know if he's still here, but if you are, full video on that. No. Okay. The only issue, Legends, and look, I have no problem going over, not yet, love that. I have no issue, and I'll go over it with you real quick, but the one thing that I just want to make for the future is that for going over certain course material or just education in general, it's a bit tough for me to do, not because I don't want to do it, only because it is a bit time consuming, so it does take up some time of mine to review certain elements within there. For example, rejection zones, I think is like a 20-30 minute video, but basically, DT, for you to find rejection zones are basically just, areas of support and resistance. And more importantly, we're just looking for a lot of wicks that are rejecting in given areas. And what we're doing is drawing to the bottom or tops of those given wicks and trying to find key areas where we can see, for example, like here, you can see that there's a lot of rejection occurring there, as well as this would be a potential zone as well. You can see a lot of rejection occurring within there. Looking for a lot of wicks where structures rejecting in previous regions. And on top of that, if you don't know what rejection zones are, the best analogy that I use to define a rejection zone is like, think of it like a hot stove. Like when you put your hand on a hot stove, you're going to pull away really quickly, right? Because it's really hot. Same. And then when you put it through, and then it just reciprocates in the other way. So think about it like this. You put your hand here and the stove was hot. No, it's hot. But then we broke through. Now the stove just switches. Now it's hot. Don't want to touch it. And so that should be a good metaphor example of how to identify rejection zones. But you're just looking for areas that had a lot of wicks in previous regions. And for example, here's another one. You can see a lot of pending orders sitting within here, right? And so looking for a lot of areas of dynamic support and resistance. Oh man. Parvi, we're going to go over that at the end. I'll mute your mic. I got you, big man. Alex next. Legend. I'm going to mute your mic, Alex. 2 seconds. Big man, how are you?
Yes, I'm good. And you?
What's going on?
I took a trade on a GBP GPY.
How'd it go?
And it's going very well for the moment. I think I will close soon because
You want to share your screen real quick?
Yeah. Just 1 second.
That's what the live training does, huh, Legend? I think that's what Mehdi was. Is Mehdi still here? Yeah. I think that's what we were all talking about yesterday on live training. Mehdi was like, "What about GJ?" And so that looked good. Let's take a look though. Oh, this is clear. This is very clean. Shout out to you.
Thanks.
Yeah, so I would just say fix the trend line, right? The ascending. You see
this trend line?
Yeah, just because it's running through all the candles.
Yeah. But I will. I will fix it because I put it on a daily time frame.
And then real quick, Alex, can I make 2 suggestions?
Yes.
Get rid of this. Draw that. Yeah, draw that from the top. There you go, Legend. And then you have another trend like this.
Like this?
Yes, sir. Bring it. No. Start from the way top.
Okay, perfect.
Yeah.
Right here.
Such an ugly trend. Doesn't. I mean, I'm trying to. You know what the real trend is? It's like I don't really like it. I mean, it's something like that, but is this reversal?
Okay, yeah.
Yeah, I mean, it's something
So
along the lines of that. You know what we're going to do? This is what we're going to do. Start your trend from that green wick, and then you're just going to tag this one. That'll work.
okay, perfect.
Yeah, that should pull out. Yeah, the green one, and then try that.
Right.
Okay, keep it like that. Keep it like that. Yeah, that's fine.
Yeah, okay, perfect.
Okay, so where'd you enter?
I enter right here.
Yeah.
But my first the entry I would like to
Wow,
sorry, the
that's a
entry I
perfect.
would like to take is what here.
No, you can't take that. Where's market
Okay,
momentum?
okay. It's ascending.
Right, and more importantly, even here, you can't take entry here because that's an if sum entry, right?
Yeah, yeah,
Even,
yeah.
even though, Alex, not trying to beat you up, just showing you. Even though it looks like a structural retest, you have to remember daily momentum is where? Here, in this example.
It's ascending, yes.
And then the short-term momentum here is where?
Ascending.
Okay, what's perfect about this entry that you took? Where's the momentum?
Descending.
Okay, more importantly, did we break out of the daily ascending? Yes, right? And you're entering,
Yes.
and you're entering where the structural retest occurred, right?
Yes.
You see how this trade would have more risk compared to this one.
Yeah, true.
Beautiful. So I'm very happy that you took this and not this. Very happy.
Yeah, but I didn't take it because I was scared a little, but I was not sure if the good entry was on the
Oh,
top or
look,
where I took.
stop right there. Stop right there. You weren't certain, right?
Yeah.
Good. So you didn't pull the trigger. Done.
Yeah. Okay, perfect.
You know, that's called maturity within the game. That's called being mature about the game.
Okay, yes.
Perfect. Well done, legend. Well done. Amazing. So,
Thank you.
where are you looking to run this to?
At the right here at the second yellow box.
Is your stops at break even?
Yes, my stop is a little in profit. I think I put it right on the top of the green candle.
Okay, good.
But I did a mistake before the big. We had the news, but they didn't affish it on the Forex factory.
Okay.
And I forgot to put my take profit, or I would take profit like one candle after my entry.
Okay. So it's all good. We learned, but look, the beautiful thing in the end of the day is the way this looks. Alex, this is 1 and this is 2. Who's bigger?
1
So you should still expect continuation where?
to the downside.
Right, unless we start to break back above, falsely breaking this.
Yes, okay, perfect.
Right? Now look, it could always come back to here, structural retest again and drop, but you would be out of the trade once this happens anyway. You would just close,
Yeah.
take entry here again if you want.
Yes, okay.
Beautiful. Amazing, legend. Amazing. Well
Thanks
done.
a lot.
Well done. So 25% last week, and we're holding it down this week again.
Yeah.
Big man. I see you, Alex. I see you.
But I think I'm already like 10 or 10% this week because I took a trade on USD GPY
How'd that go?
too, but it's the same that we talked yesterday, and I'm still running it.
Okay. Is that still running? Are you still up?
Yes. I'm still in the buy.
Beautiful. Well done.
Yeah.
You see, I wanted to signal yesterday, but I promised you guys on the live training I wouldn't because of the news, you know?
Yeah. True.
Yeah, so I wanted to show you guys that your mentor will stick to what he says he will do. So I will pull my trades Wednesday night into Thursday after all the news is done.
Yes, perfect. So I think I should put my stop loss closer to not getting beat by the news.
When's the news coming out? Tomorrow?
I don't have my paper. I think yes, tomorrow.
If there's news coming out tomorrow, your stop should be, it's tough because the thing is, Alex, it could just hold this and drop. You know what I mean? It could literally just go.
Yeah.
You see, really the key region is this is when the trade becomes invalid. That's when the trade becomes, no more.
Okay, okay, perfect.
So I don't know if you're going to be up or not. If you're going to be up, watch it. If you're not going to be up, put your stop in profit and see what happens.
Okay, perfect.
So what did we talk about yesterday? Never turn a winning week into a losing week, ever. Once you're up, figure out how to stay up.
Yes, yes, for sure. Well, I already put all my stop loss in a profit or break even.
Good.
And I on the USD GPY, I removed some lot. I took some profit just to be sure to, if
Good.
I lose, I lose some profit. I don't lose like the money I made last week.
Good. Beautiful. Good. See, look, one thing, guys, real quick, just going to use Alex's example, and DT asked down below, what is live trading? Live trading is a workshop that I host for the students of the full volume training course or the one-to-one, in which they can come weekly, ask any questions that they want, either pertaining to the course, trading related, whatever they need. I'm there to assist them. It's basically an open place where you can talk freely about trade ideas, review anything. And so, like I tell everyone at the end of the day, if you're going to learn a training course, it has to be interactive. You have to be able to ask questions, whether you take the one-on-one or full volume. You got to be able to pick that person's brain. And so one topic that we talked about yesterday with Alex was capital preservation, and more importantly, how to continue to be profitable even when you start off really well in the week. And so one thing was Alex had a really hot week last week. I think he did like 25%. So we said, okay, if you don't do so well this week, you need to make sure that by week 3, you're still up. And so I think we agreed that he wasn't going to lose more than like, I think 3 or 4% per week, because he still finished the month like 12 or 15% up. But now he's in a different scenario. Now he's up 10% again. So the question becomes, okay, Alex, how much do you want to give back max this week that you're up 10% now? You know what I mean? And that's what it becomes. Because Alex, would you agree that there are zillions of opportunities a week?
Yeah.
So if that's the case, you just need to be a winner. You need to figure out how to be a winner. That's it.
Yes.
Stay a winner. There's one thing, it's easy to be a winner, but to stay a winner, that's tough.
Yeah, that's true. That's right? take a lot of work.
Right, because a lot of people, anybody can take a winning trade or two, but to continuously take winning trades, that's the difficult part. And so that's why you have to have discussions about, okay, Alex, what are you going to do to make sure that you finish as a winner by the end of the month? Because you're a winner right now.
Yes.
That's your job. You already did the hard part. You got the money. Now do the easy part. Keep it.
Yes.
Don't give it away, That's
yes,
it.
Yes.
So all in all, Alex, kick-ass job. Keep going. Keep striving. Proud of you, boss.
Thanks a lot.
Always. All right. Let's go to the remaining questions because the girlfriend, I'm going to run back to my screen, Alex, if that's okay. And then the girlfriend, Legends, wants to go get dinner soon. And I didn't realize I was on the webinar for 2 hours already. So I appreciate everyone that's staying here thus far. I will get to all the questions really quickly now. So, Alex, okay. Mohammed said, if you don't mind, Albert, could you quickly go over euro yen? I don't really look at that pair, so if you won't mind. Yeah, Mohammed, I got you, Legend. Let me unmute your mic real quick. Mohammed, Legend, do you have the analysis or you want me to run through it real quick? Up to you. Hold on, I'm going to unmute your mic. Why is it unmuting? Unless you don't have a mic. I don't know. Hold on. It should unmute you. This is annoying. ATM. I'm on the phone at the moment. All good. So, Euro JPY. Looking at it. Let's just take a look real quick. Wait, is Chris here still? Because I know he has the stuff. Nah, he knocked out. All good. Okay. Wait. Alex, I'm gonna unmute your mic. You have Euro Yen? One of you guys gotta have Euro Yen. Does anyone have? You have Euro Yen, Alex, or no?
Trade or if I'm not sure to understand.
Do you have any analysis on it?
I will look real quick. No.
If not, I'll mark it up real quick. Up to you. If you have it, I can just draw on that. Up to you.
I just have the resistance and the. I don't have any analysis. I just have the resistance and the support on this chart.
Okay, that's fine. I'll just break it down then. No worries. All good. Thank you, boss. Okay. So then real quick, we're just going to label just this as the range right now, just to make it nice, sweet, and simple. Please keep in mind for Euro Yen, all of the momentum is warranted to the upside. This is all treated as relief for profit taking. We did just create short-term higher highs. Please keep in mind that's your next lower high. So you would want to see a break of the 133, pull back, start running it back to the tops, invalidate this previous region. Mohammed, if you're watching this, you are near the end of the roller coaster. Risk starts to increase heavily. At the same time, this is all treated as a liquidated movement. I would not be surprised if this starts to drop. And that could be treated as relief for upside, or if we do invalidate the lows by breaking below. So right now, structure's too extended. Either wait for a pullback, then go, or break the tops, invalidate this initial sell, pull back, run to the tops. Only way you can take a sell is if we broke below these lows, short-term pullback, drop. That's the cleaner sell. You could get a short-term sell in here. Those are all the possibilities that I see. Does that make sense? Let me know, Mohammed, if that makes sense. Beautiful. Awesome. All right. Let's see. Yeah, Sunny, I got you. You're yen. Thank you, Maddie. Appreciate that. Appreciate that, Stephen. Stephen or Stefan, I hope I'm not butchering the name. Apologies. Parvi, I'm going to mute your mic real quick, Legend, to answer your question if you can. What's up, Legend?
Hey, how's it going, Albert?
Good, big man. What was your question? About the candles.
Yeah, it was about the candles. I was going to say I'll run through it with you on the Sunday webinar because I'll have to pull up some source material from one of the videos. Okay. I don't have that at hand, and plus I think you said you need to go and get some food.
No, you're good though. So, but do you have an example in your chart?
Yeah, what it is, I actually spotted it on Aussie USD.
Okay. Here's your example, because I have a good way to make the charts really clean as well.
Okay, yeah. I think you've got it marked on yours. Was it? Yeah, Aussie US dollar.
If you want to share your screen, or you want me to go through
mine? Share screen. Just a moment.
No worries. And then last but not least, and then we'll get to Kunal to finish it off and call it a week. By the way, whoever's profiting from the crypto run, congratulations again. I am one of those people, so that's why I'm bringing it up. But yeah, so if you guys want to know, once again, real quick before we get into Parvi stuff, I'm invested in Neo and Ripple. So,
yeah, it was just this daily support.
Yeah, okay, I have the same level. So you're saying when's it okay to run through?
Yeah, because on the videos.
Yeah. So in the end of the day, look, I'm all about visuals and aesthetics. Okay, especially now. Look, I have the same thing. Zoom out, Harvey. If it's gonna annoy you that you don't like it running through the candles, this is what I'm gonna suggest you do. Double click it. Double click the level. Then you see where coordinate. Oh no, sorry. Go to the level. Yeah, you see where coordinates is here.
Yep.
Copy and paste the coordinates. So copy the coordinates. Then drag then click OK. Then drag this level to here. Just keep it at the same point. Not same point, just the starting point. I mean, just drag it. So you're not running through the candles. Yeah. Just like that. Keep going. So you're not running through until you get to right here. Keep going because you'll be running through here. So keep going.
So
and then double click again. And yeah, it just doesn't matter where you put it because you have the coordinates saved. So just double click now. And then go back and then enter the coordinates that you had before. There you go. There you go. Done. It's not running through candles.
Oh, okay. Yeah.
How nice is that, right? So it just depends in the end of the day whether it's going to help you more to see that, you know what, yes, that's a falsely broken area.
Okay.
Or, you want just a clean structure. Whatever you want is your preference. I just say don't run through the candles because, probably when you're trading your $100 million account, you got to be able to see structure in the most clearest possible way and not have 1,000 different things, running through.
Yeah, makes sense.
So that's the only thing that I get to. And by the way, Legend, I'm going to get your Telegram messages tonight. Sorry about the delay.
Okay, yeah, no worries. That's fine. That clears that up.
Yeah, so does that make sense on that?
Indeed it does.
Beautiful. And then tonight you'll hear from me on the Telegram, okay?
Okay, nice one, Albert. Cheers for that.
Always. And then last but not least, Kunal, I'm going to unmute your mic, Legend. Kunal, if you have a mic. Oh, it just says you have video, but you rose your hand. So I don't know if you had a question, Legend. If you did, let me know. If not, all good. Let me know if you did have a question or not, Legend. Okay, maybe not. So, all good. All in all, Legends, thank you so much for coming out for another weekly webinar. Really, really appreciate it. And the fact that some of you guys just reading it is, you guys 12 a.m. in the UK, 1 a.m. in Budapest, 4 a.m. I think someone said in, where was it? Yeah, thanks, worth waking up before. I'm crazy. Shout out to all of you guys. And I can't thank you guys enough for committing to, what I'm doing. I really can't. And so, like I said, guys, I am nowhere, I would never be where I am without you guys, without the support. And so in the end of the day, I'm so blessed and I'm so grateful. And so thank you so much to all of you guys. I really appreciate it. And then Philly, send me a message on Telegram. I'll send it back to you. I'm not going to be able to do it now because I got to go get the girlfriend dinner, but send me a message on Telegram, Philly, at ThatFxTrader. I'll get it over to you, Legend. No worries at all. If that'll be all right. Does that suffice for that? That'll be all right. Yeah, just send me a message on Telegram. I'll bang it out. And so once again, guys, thank you so much for coming on. More importantly, thank you guys to you for the constant support, for always shouting me on Instagram, stuff like that. Like I said, it's not me growing it. It's you guys, starting a movement here. 40 plus full-time traders in 20 months. Shout out to all of you guys. Shout out to the future full-time traders. And so, like I said, guys, you guys need anything, use me. This is what I'm here for. Don't ever feel like you're bothering me. I love working with you guys. I truly never thought that this would have been a passion of mine, but just working with you guys, seeing the results, seeing the self-improvement in you guys, it's beautiful. In the end of the day, trading is a direct correlation to life, Legends. Just like when you're born, you don't walk immediately, you gotta crawl, and even when you start walking, you start to stumble. But through time and trial and experience, you walk proficiently, and eventually you start to run. Translate that into trading. If you guys can think in that manner, you guys will be on your way. And so with that, Legends, I hope you guys have a wonderful rest of the week. Trade safe, be careful, lots of data coming out, and I'll see you all next Tuesday at 5 p.m. Have a wonderful rest of the night, everyone. I'll speak to you guys soon.